All right, before we start this, let me just quickly preface the whole video by saying that the vast majority of my money is invested in very safe, stable, reliable, long-term stocks like Microsoft, Amazon, and tons of others. But once in a while, I do like to bet a very small amount on some speculative stocks that happen to be very high risk, but also have a lot of future potential. And in today's video, I want to talk to you specifically about the disruptive fintech SoFi, ticker symbol SOFI, and give you 5 reasons why I think this, high risk spec stock has giant future potential and why I'm choosing to buy this stock myself for the very long term. With that said though, guys, as always, do your own research, make your own decisions. This is my own personal opinion. It's my own bullish thesis, but you can't just go out there and blindly copy other people. You got to put in your own work and find stocks that fit your portfolio and your specific needs. But if you're still with me, I hope that you enjoy the video and I hope you enjoy listening to my bullish thesis on this stock here in particular. Let's go ahead and jump straight into it. All right, guys, and reason number 1 here is going to be their business strength. And this is a business that I strongly believe in for the future. See, SoFi is what we call a fintech disruptor in the larger financial sector. And what they do is they're essentially an online bank, but more specifically, they're just an all-around personal finance kind of platform that helps you do many different things all on the same app. You can have a checking account, a savings account, you can get a credit card, you can buy stocks, you can buy cryptocurrencies, you can take out loans, you can refinance your high interest loans. They manage student loans, home loans, mortgages, auto loans. They even give out loans for home improvement or travel or for your wedding. They offer retirement accounts like an IRA. They have home insurance, life insurance, pretty much anything finance related. They probably have some kind of product or service for that. And the great thing is that it's super convenient because it's all in one place on the app. It's really easy to manage and keep track of all your finances. Plus, their rates are also very competitive, and that makes it attractive too. And so far here, all of this has been a winning combination for SoFi as they've been able to grow their users from less than 1 million in 2019 up to almost 2 million in 2020, up to almost 3.5 million in 2021, and now surpassing 5 million, over 5 million this past year. Meanwhile, the total market size for financial services is over $22 trillion, and the specific fintech market is continuously stealing more and more of that market and disrupting it, which is why SoFi estimates that their own addressable market is already worth at least $2 trillion today. For context, that's around 400 times larger than all the sales they did last year. And it's why they've been able to grow their sales by such large amounts every single year. Even in the disastrous 2020, they still managed to grow their revenue by almost 30%. And even following that strong performance, they still put up over 70% growth in 2021 and over 50% growth in 2022. And mind you, this is at a time when student loan repayments have been frozen by the government and they've been talking about canceling them, which doesn't directly affect SoFi because they're a private refinancer, and we'll talk more about that later, but it still hurts them because less people choose to refinance their student loans if they think that they're going to be paused or flat out canceled. And that used to be actually the largest revenue stream for SoFi, so they were heavily exposed to it. And so still being able to grow their sales at these high rates regardless is pretty incredible. Now, granted, growth is now falling to around 30% going forward, given the horrible macroeconomy that we're going through, as well as the continued pausing of student loans being, way longer than anyone anticipated. But it actually leads me to reason number 2, which is how incredibly well diversified they've become to make sure that they can keep growing at high rates regardless. And this has been achieved through a number of brilliant moves that I think the management team has made, including the acquisition of an actual bank to finally give them official bank status, which allowed them to make certain structural changes to their business to improve their profitability, which we'll talk more about in just a second too. But they also acquired the fintech company Galileo, which not only allowed them to integrate Galileo's advanced APIs and technology into their own mobile platform to enhance their products even further, but it also gave them access to the more than 130 million user accounts on Galileo that they can now target with all of their own products and services too, thus creating giant synergies across their entire ecosystem, which is helping them diversify away from just student loans even further. In fact, back in 2020, their lending segment that includes student loans made up a whopping 83% of the entire business, but today it's fallen down to the 60s. The technology platform has also increased from 15% up to 20%, and the financial services segment has grown from just 2% up to 11%. And yet, that's not even because their lending segment is like crashing into the ground or performing horribly. In fact, it's actually grown over that time, more than doubling in size from around 500 million up to over a billion today. But it's really just that they've been growing the other parts of their business at an even faster rate, if you can believe it, and that's lowered the dependence on the lending segment. And even with all the turmoil around student loans to begin with, because of the repayment pause and all the efforts to cancel student debt, which, by the way, is currently going through the Supreme Court, well, what many people don't understand about SoFi is that this is just kind of a temporary setback for them, since anyone who refinanced on SoFi no longer qualifies for that debt forgiveness. So all they really need to do is wait for the repayments to start up again, and then you'll have people wanting to refinance their student loans once again. And whether that's right or wrong ethically, I'm not really going into that. I'm just saying that it's very unlikely here from a business standpoint that the government is just going to flat out wipe away all student loans from existence and make colleges completely free going forward. So I think there's always going to be this business here for SoFi to tap into. And yet, despite all the positives, the stock has actually crashed into the ground, which leads me to reason number 3, the falling stock price and the valuation. From the top, SoFi stock has now fallen by over 77%. And of course, a falling stock price alone doesn't just automatically make a stock a buy, but it does show two things here in specific. One is that we know what kind of heights they've reached in the past, despite being a much larger company today, and I'll talk more about that in just a second when we cover profitability. But number 2, it's also brought the valuation down to a much more affordable level, going from a price-to-sales ratio of close to 10 all the way down to just about 3 today. Now, don't get me wrong, a PS ratio of 3 is still a little rich, but it's only about 20% more expensive than the sector anyway, which is a pretty good freaking, deal on it for such a high growth spec stock like this. And not just that, but sales are not even going to be the only focus soon, because this year management is actually predicting that they'll become GAAP profitable, which brings me to reason number 4, future profitability. At the moment, SoFi continues to lose a lot of money on the bottom line every year, but a big reason for those losses is actually stock-based compensation at around $80 million per quarter, which is about a fifth of their total sales. So it's a huge drag on them. But that's an issue that will gradually dissipate. In fact, a big chunk of it was even related to the IPO and is set to roll off over the coming year. And like I said, management actually feels that by the end of 2023, they will finally break into GAAP profitability, which analysts seem to agree with, since they estimate that SoFi's earnings per share will grow by a giant 178% average per year over the next 5 years, which is giant growth for EPS. And that's because SoFi had technically already broken into profitability to begin with, but no one really paid any attention to it because it was on an adjusted basis. In fact, they had already reached profitability in 2021 and then expanded on it by close to 400% of an increase last year. So it's only a matter of time before this goes from adjusted profitability into GAAP, kind of standard profitability. And I think that should reflect heavily in the stock price. And that ultimately leaves me here with the final reason number 5, which is their incredible resiliency. I mentioned before that their growth is slowing down these next couple years, but you have to remember that not only did they put up huge growth already before that, which is a hard comparison going forward just on its own, But this is also at a time when the economy is a disaster and almost everyone is predicting a recession if we're not already in one, which is a very real possibility too. So the fact that SoFi is even performing this well at all during this horrible time is actually pretty damn impressive. And if they're even able to actually turn a profit this year, that would just be the absolute icing on the cake. And I think from that standpoint, the stock is a very strong buy as a high risk speculative stock. If that's what I'm looking for, high risk, high reward potential, I think SoFi is one of the most attractive in the market. The biggest problem with it though is if we do in fact go into a recession, and more importantly, how deep is that recession and how long does it last? Because there's no way that a finance related stock like this doesn't get hit pretty hard during an economic recession. But I also feel that that's probably why the stock is trading as cheap as it is. So I'm not sure how many times I'll get buying opportunities on this stock at these levels. So I just want to be able to pick it up right now from a long-term perspective, buy it in very small amounts. And if it continues to crash and we go into a recession, then I want to be able to buy more and lower my cost basis through that. But over the very long term, I got to imagine that the economy and the stock market will eventually recover. And when that happens, I think SoFi can definitely be a high flyer once again, just like it was in the past. But hey, that's just my own opinion, guys. Don't do what I'm doing. Make your own decisions, but let me know what you think about it down below. Do you agree with my thesis? Are you bearish on it? Do you hate this stock? Let me know why, and we can have a conversation about it. But thanks again for stopping by, my friends. I hope you're all doing well out there, and I will catch you in the next video. Take care, everybody. Bye-bye.